Hey everyone, welcome back to my channel. It's your boy Ray Cartier. A lot of you guys been requesting me to learn more about beginner trading strategies. So today I'm going to show you guys a very simple strategy. This requires no more than 10-15 minutes of the video for you guys to understand how it works. And I've been getting a lot of questions on this topic in my Discord, in my community overall. So I thought I'd make this video once more. So with that being said, let's go right ahead and tune into the video.
All right. So last week, CJ was ranging between this area, right? Let me just highlight it. So this was like the average daily range for CJ last week. It was trading near 114,600 to 115,600. And it's just been bouncing up and down. And last week, so put in resistance area would have been up here and down here, based on the 5-minute chart at least. Let's go out a little bit. I only did the 5-minute because I wanted you guys to see the difference on the fact that it was trading between a specific highs and the lows, like you can see here. And then there was a breakout right here. And then ever since then, it's been creating a channel, like a mini channel, right? A channel is formed basically when there's either upward channel or downward channel, and the currency pair is creating either higher high or lower low. In this case, this is an upward channel, and as you guys can see that it's creating a higher low, higher high consistently, right? So based on this, we can clearly say this is a upward channel. I'm gonna try to label as much as I can for you guys. Okay, so based on the channels, okay, the theory is that if the currency pair continues to respect the channel, it will hit the new high, hit a new lower, higher low, and then keep going until eventually it breaks. Right now, based on RSI and stochastic, I believe the CHF JPY is pretty overbought. On RSI, not yet. It was overbought yesterday. You can tell by looking at the purple area. So when the line comes out of the purple area, basically it's a sign that it might be overbought. Let's take a look at what stochastic's doing. Yeah, so in stochastic, it's definitely overbought. Yeah, even 30 minutes is showing overbought. So when it comes to being overbought, oversold, stochastic is way more accurate than RSI. RSI is a very versatile indicator, but I don't really like to use RSI for overbought, oversold. Sometimes I do in the longer time frames, but generally it is not the most accurate indicator to rely on oversold, overbought. Okay, so stochastic, when you see the blue and the orange line come out of the purple field, essentially what you want to see is a crossover happening between those two above the purple field. And if it happens, it's basically showing a sign. Not only there's a sign, sell signal, there's also a overbought signal. Okay, so this area would be considered overbought based on stochastic. And then the bottom area would be oversold based on stochastic. Right, pretty standard, right? Now, as I mentioned, it is created a little channel, CJ. And historically, CJ is known to respect the channel pretty well overall. And what I mean by that is it rarely breaks the channel. But my theory, my analysis in this market right now is that because it's been, oh crap, sorry. But because it's been trending upwards for quite a long time and is now trading near yearly high, it's now coming to an end. I feel like there's some exhaustion happening at the top end of the candles, and I'm also seeing that there's a double top happening. So there was peak moment here. Okay, we call those a peak. It was around 117,300, and same price right now. Oh, look, it actually did end up going to 500, but it pulled back down. Now we're trading near the similar range. And by the way, guys, that happened in August 2020. And the last time CJ was that high was all the way in 2018. So it gives us a pretty good idea that right now CJ is trading yearly high, and it's pretty overbought. Not to mention there is a crossover happening, pointing downwards almost. So the lines are called percent %K and percent %D. And although it's not pointing downwards yet, which is what you want to see as a sell signal, it is still crossing over. And it is still outside the purple field, which gives us a suggestion. The indicator is giving us a suggestion that it may be overbought. Right? So right now, what we're looking for basically, let me draw the support and resistance real quick. All right, so that's been one of the resistance level. Here's another resistance level. Here's a support level. Here's a support level. All right, so now that we got the support and resistance and the channel, I'm just gonna quickly redo this slowly so that you guys can understand how I did it. So how do you draw a channel? You're basically going to grab the trend line and you're going to try your best to connect all the top ends, all the top peaks, and kind of connect it together like a trend. And then you're going to do the same thing with the bottom. Sometimes it's like, sometimes you can't really make a channel because it doesn't line up so perfectly like how it is doing here. But in this case, this is a perfect channel because it's been respecting the same length of high being created and same length of new lows being created. So this is a very well-structured channel based on the CJ movement. So this is a very predictable market at this point because it's safe to say that it is approaching the resistance level and hitting the upper portion of the trends, the channel. And most likely there's two possible resistance level here, either that one or at the top of the channel. Okay, these are both resistance level. The top end of the channel will always serve as a resistance because if you line this up properly, if you look at all the past movement, it didn't really break the channel. Okay. But if CJ were to break right through and continue to go up, it would no longer be considered overbought. Then that is just a continuous trend, which can very well happen too. But in this, based on all the numbers put together and based on all the technical factors, I'm calling this a overbought based on just the technical aspect of things. Just because from the technical standpoint, it's very difficult for CJ right now to break further ahead and continue to break through. Although I'm seeing a decent amount of momentum, there's constant exhaustion towards 117,300 area. Okay. And another way to kind of see that is by zooming in to the candles when they're approaching it. If you're seeing these like wicks appearing as you approach a certain point, this is showing wick exhaustion. Okay, these are all wick exhaustions. If it was high momentum, it would see just bullish candles and rarely any wick exhaustions. You will see a very solid bullish engulfing candle. But almost at every single given point, once it approached 117,300, 117,400, CJs keep getting tired. And here as well. As we're watching it live, we're seeing another curved momentum. And now RSI is trying to dip right back inside the purple field, trying to take a dive. Right? And then percent K and percent D is about to cross over and also take a dive. So this is basically showing, giving us more evidence that there is a wick exhaustion, there is a price exhaustion. So it's further confirming the fact that CJ just might be overbought at this point. Now, it's not enough to say yet. What you want to see next is the physical candles moving downwards. You want to see this movement. But if it sees the movement, if you see the movement, if you see the crossover happening in stochastic and it actually goes back inwards, now we're seeing high momentum downwards, okay, if it actually does do that. And at that point, it will be a good sell entry based on those factors. Either ways, it's already trading near the high end of the channel, okay? Although historically, it's been bouncing back down after creating a higher high. Doesn't necessarily always have to be the case. Like if you look, if we go backwards for a bit, here's an example. So from this point to this point, it led up to 117, 117 and some change, right? 0.50. However, from here, once it was trying to create a similar amount of run, it couldn't go all the way to the top end. It actually went right back down and then went back to the top. So what I'm suggesting is like, what I'm saying is this could very well be the same case. This could be a chance for a retracement where it does that and then continues the trend. Or we might actually see a channel break. Based on the numbers right now, not based on the trend, based on the historic numbers and the technical aspect of things, there's a higher chance of channel breaking downwards then upwards. Okay, so what is a channel break? Channel break is when a trend continues I'm gonna add something here. Okay, I try to label it as much as I can. That many area. I'm actually gonna get rid of RSI because it has no use right now. Next month we'll do divergence, which is a little bit more advanced. So this is basically some of the things that I look at when I'm trading. We're basically now trying to see if it will continue to respect the channel and create a decent amount of momentum while it's heading upwards, or is it going to break out? That's what you want to see. Right now we're approaching R2. I'm gonna label it for educational reasons. Now you guys should definitely get used to labeling all these, just because it's easier for you guys to reference it for yourself, especially during the learning process. Right? And later down the road, we will even learn Fibonacci retracements where you can reference percentage and see how high or how low the retracement levels are. For example, if it passes a certain percentage, it would be considered a reversal. This is like a more advanced way of calculating retracements. And you could also use it as support and resistance. All right, let's continue. All right, so again, there's some exhaustion there. Let's go back to 5 minutes and see what the candles are doing. Okay, so there was a little bit of retracement, and then right after it hit the same level where it retraced originally, it's creating the period right after it created that bearish movement, it created a pullback. Here it's fighting right now as we speak, whether it's going to be another pullback or if it was going to continue. Right now it is a bullish engulfing. okay, right now. But period still has 3 minutes to go out of 5 minutes. Still counting down. This could very well be a bearish engulfing. Right now it is bullish engulfing, but it's still pulling back. So we can't really say what it's going to be until the candle actually closes in 3 minutes, right? And this is basically what you guys want to do, guys. Like, this is not like, you can't really rush Forex. You have to be patient and try to like watch the movement. Now, not all the time it's going to be this slow. I assume it's because it's 9 p.m. right now that it's not moving that quick. Once you hit like 1 or 2 a.m., it's going to move a lot quicker, because I don't know why, but London session tends to definitely have an effect on CJ, primarily because CHF is Swiss. I guess that's probably why. But you guys can see that it's still like kind of like resisting a bit. Like, there's definitely resistance level there, right under R2. You cannot ignore that. But the big question is it going to retrace right this point? Or is it going to continue upwards? Look, percent K and percent D did cross over on the 5-minute period, and it is pointing downwards. So we're seeing more potential exhaustion. Now, what's going to be nice if we can see a nice wick exhaustion. We're not seeing that like how we did on the 117,400. Like, there were so many evidences that this was going to drop. Look at all the wick actions happening right at the top. At the resistance level, there was multiple wick exhaustion. It was trying to create a higher high, but it just could not sustain the price point. So it kept getting knocked down, knocked down, knocked down. And what happens? It ended up dropping right back down. That's a very nice wick action here too. I love these wick action. Generally, what happens is right after wick action, the next period will even likely be the opposite candle. So if the wick action happens and it was a bearish candle, most likely the next one's going to be bullish. And if the bearish happens and there was a nice wick action, most likely the if the bullish candle was pulled back a lot, most likely the next one will be a bearish candle. That's what I've been seeing from the candles, at least. That's very, like, historically, that's what the candles do. So what do I want you guys to focus on right now? I don't want to, like, I know this lesson might be a little bit overwhelming because I'm kind of bombarding you guys with information, but this week I want you guys to focus on not necessarily, you can do the stochastic, but I want to ease the load of it. So with the current support and resistance that you guys are already aware on how to use, I want you guys to get used to drawing these channels, right? It's super easy. All you're doing is, let's redo this. All you're doing is you're grabbing the trend line and you're trying to connect all the lower ends, and you're trying to connect all the higher ends, right? And thus creating a perfect channel. Not always it's going to be this perfect, like where it's constantly hitting the new lower, higher low or higher high. But in this case, this channel is just very respectable and constantly hitting the same similar peak of new high and new low. But when this breaks, when the channel breaks, when the price actually goes below 117,100, especially if it does in the next couple of days, it will be a very, very, very strong sell based on the technical aspect. Because right now we're trading overbought area. And once again, if you zoom out one day, the last time CJ was this high was August, and then before then it was 2018. Right? So we're already in a very overbought range. We're already at the top end of the mountain. You guys know what I'm saying? So really just trying to figure out this point, like we're all trying to figure out this point if CJ will be overbought and we'll see a confirmation. And that's going to help us significantly with the next market analysis. Anyone have any questions? Trying to label this where it's easy to spot. All right. Anyone have any question in the chat box? Let me quickly recap how to do the stochastic. All you're doing is you're looking for the blue and the orange line to cross over, and you want it to go into direction back into the purple field. So if it's on the downside, on the lower end, you want to see that it crosses over, pointing upwards. And then for the upper end, you want to see that it's crossing over, going the other direction, like back inside the purple field. And that basically is a confirmation on trade entry. Now, what time frame? Typically, I trust 30-minute more than 5-minute because 5-minute is too early. But just because it's 5-minute, it's not to be underestimated, because 5-minute can still be hinting you that on a 30-minute it will be a confirmed position. But I generally like to do 30-minute and above just because it's more accurate for a swing trade range. And that's basically how you do stochastic crossover technique. I used to use this a lot for scalping techniques, but now I use it more so for trading swings, especially in a very high percentage market like this. And that's pretty much how you use the channel break strategy and channel trend strategy using support and resistance and stochastic crossover technique. I'm going to end the recording here so that you guys can ask more questions.